Hello, hello, hello. How are you? I hope that all is well with you. Happy October. Goodness gracious, can you believe that we are in the 10th month of this year? Time is certainly flying by fast. Also, you may have noticed that the presentation for this ABCs of Investing educational moment is slightly different from the other episodes. Although the presentation is slightly different, we believe in at Pivotal Solutions still provide you with great and high quality content and information. Now, I have a question for you. How many times have you looked at your paycheck or your paycheck stub and you were want an increase or boost in the amount of money that you were getting? Trust me, this is something we have all experienced wanting more money. But may I let you in on a secret? The secret is that your desire for more money is a symptom of an investment term called capital gain. Yes, capital gain. Mind you, I'm sure that you would like to reap continuous capital gain, like unlimited breadsticks at Olive Garden. But what if how would you like to learn about potential assets that may generate capital gain for you? Or better yet, how would you like to become more familiar with how the concept capital gain works? Well, now remember from our first ABCs of investing education moment, an asset is anything that could put money in your pocket. But before we move forward with discussing capital gain, I would like to introduce myself. My name is Dr. Lakeisha Lowe, also known as Dr. LL, and I am the CEO of Pivotal Solutions Management, also known as PSM for short. And I welcome you to the seventh educational moment for PSM's ABCs of Investing series. As mentioned before, the focus for this educational moment is on the investment term capital gain. C is for capital gain. Now, let's move forward to discuss what capital gain is. Capital gain is an investment term that occurs when a person earns a profit on an asset that they initially invested in and bought. It takes place when a person sells an asset for a higher amount than the amount that they bought the asset. It occurs when the asset goes up in value. And we all love when an asset goes up in value. Examples of potential assets that may generate capital gain include stocks, bonds, mutual funds, ETFs, also known as exchange traded funds, cryptocurrencies, real estate, furniture, collector cars, antique vehicles, classic cars, boats, jewelry, and artwork. Now, are these the end all be all assets that may generate capital gain? Absolutely not. There are many other assets where you could generate capital gain, but this just to get you started and get an idea of examples of assets that you may generate capital gain. So, I have given you a basic understanding what capital gain is, as well as examples of potential assets that may generate capital gains. But it is equally important to provide you with the example showing how capital gain works. So, on the screen, you will see an example that's loosely based on a scenario given by Investopedia. The numbers and dates with the example have been changed. Also, the example does not represent or constitute a recommendation, endorsement, or any type of investment advice. Now, let's look at our example in more depth. Let's say that Jeff, our friend and investor, purchased 100 shares of Amazon, AMZN for short, its nickname, stock on June 7, 2022, at $123 per share. Jeff then decides to sell all 100 shares on September 14th, 2023, at a price of $144.72 each. Assuming there were no fees associated with the sale, what would Jeff's capital gain be? Hmm. Anybody have an idea what his capital gain would be or the steps to take to determine his capital gain? Well, even if you say, Dr. LL, I have absolutely no idea. Even if you don't know, that is okay. That's why we're here to learn. So, the steps that you would take to determine whether or not there was a capital gain consists of three simple steps. Three. That's it. Keeping it simple. Step one, you will calculate how much is paid to purchase an asset. Since Jeff purchased 100 shares of Amazon stock for $123 per share, you will multiply the 100 shares times $123 as shown below to get $12,300. Jeff's total purchase price for the 100 shares of Amazon stock was $12,300. After calculating the total purchase price for an asset, you would then calculate the selling price for an asset. Since Jeff sold 100 shares of Amazon stock for $144.72 per share, you would multiply the 100 shares times $144.72 as shown below, which will give you $14,472. Jeff's total selling price for the 100 shares of Amazon stock was $14,472. Step three, using the numbers from step one and two, we would put it in the formula given below, where we would subtract an asset's total purchase price from the asset's total selling price to determine whether there was or was not a capital gain, aka profit. So the total selling price was $14,472. And we would say minus the total purchase price of $12,300, which will give us $2,172. So the capital gain that Jeff made from selling the 100 shares of the Amazon stock was $2,172. Not bad, Jeff, and good job. Since Jeff selling price of $14,472 is higher than his purchase price of $12,300. That is a way that you can compare those two numbers before you do any arithmetic or subtraction to determine whether or not there may be a capital gain. Since $14,472 is higher than $12,300, that means that there is a capital gain. So Jeff realized a capital gain or profit of $2,172. The term realized is important in the investment world. The reason being, the term lets you know what approach you may take with capital gain, as well as your approach when it comes to taxes and capital gains. Now, am I going to explain the term realized during this educational moment? No, I don't want to overwhelm you. But what I will do is explain it in the next educational moment. To receive a notification for the next episode in the ABCs of Investing series, follow Pivotal Solutions Management's Facebook page, Instagram page, LinkedIn, and YouTube page. Each education moment will be posted on these social media pages. Also, given if you are enjoying the information provided from the ABCs of Investing series and you want to learn more beyond it and on how to identify assets that may have the potential to boost or increase your income, email Pivotal Solutions Management at info, at pivotal, PIV as in Victor, OTAL Solutions, SOLUTIONS.com to schedule a complimentary assessment and consultation. Yes, a no charge assessment and consultation. Given that you found the information provided insightful, Please feel free to check out the references given in the caption. You could click on the link to get more insight about capital gain. At Pivotal Solutions Management, we welcome your feedback. It helps us to better serve you. If you found this educational moment or any of the previous educational moments insightful or helpful, click on the like button or leave a comment. Don't be scared. Your feedback is certainly appreciated and valued. As always, I'm yours truly, Dr. Lakeisha Lowe, also known as Dr. LL, and I'm with Pivotal Solutions Management. I encourage you to remain motivated, determined, driven, and prayerful with everything you do. My hope is that you have a wonderful day and remember that financial literacy can change the outlook for your family, future generations, and you. Until next time, I wish God's blessings upon your family and you.